It's a pleasure to have everyone with us today. Thank you for coming in person. It starts to make for much better interaction, so appreciate that. We've got some great results to announce today, but beyond the results, we're also going to talk about capital allocation. I know there's been a lot of discussion in the media over the last week, and we were waiting for today to be able to talk about that. So while we'll talk about that in detail, all I can tell you right now is that there is no change in our capital allocation discipline. It will continue to be as strong as it has been, and I'll explain the details as to why I say that. So let's talk about our financial results first. Our consolidated results are a 19% increase in revenue and a 60% increase in profit after tax. And the one change you will see is we are going to talk about consolidated results consistently now, because that really captures all of the elements in M&M. And just for now, the information on standalone will be included in all our press releases as well as stock exchange notifications. Standalone profit is up 98%, but consolidated is a more representative, consistent number. So whether it's higher or lower in terms of percentage increase, we talk about consolidated because it represents a number well. And what you will also see is a lot more transparency, a lot more accountability in things we're driving. From the last meeting, we talked about the strategy for the business going forward. And that's what we're going to update you on a consistent basis. This will also reflect in our financial statements, the way we approach our segments. So we have auto, farm, and services as the three main areas across M&M and across the Mahindra Group. Our auto business has multiple components in there, including SUVs, LCVs, international. We will have a growth gem in our auto business as well, a couple of growth gems there. Our farm business is largely tractors, but there will be sub-segments we will start identifying over time in international and others, and a growth gem in farm machinery. Services includes two large businesses, Mahindra Finance and Tech Mahindra, as well as a number of growth gems. And our stated strategy is for auto and farm, capitalize on market leadership. For Tech Mahindra and Mahindra Finance, unlock full potential. And for our growth gems, a 5x challenge. So let's look at how we've done in this last quarter. Let's start with auto and farm around capitalizing on market leadership. In auto, SUV production is up significantly. And as you would have seen our July numbers as well, it's up even higher. A number of problems around semiconductors have been sorted out, and we are producing at capacity at this point in time. Okay. Rajesh and Vijay and Velu and team will cover the auto business in more detail. I wouldn't say that the semiconductor problems have gone away completely and won't surface again. I think the team's done a great job in taking care of them right now. There's always a possibility something may come up and there may be some issues in future. In the world that we live today, we don't take anything for granted. Operating leverage has driven margin improvement and has been reflected in the profits as well. What you see on the bottom line there, the profit number is up 3x at 1,400 plus crores. That does include a benefit from KG Mobility, which was the old SsangYong, because as KG Mobility took it over, it's doing better. The stake that we had has resulted in a gain of 405 crores. So that 1,400 number should be you got to deduct 405 crores to really get the ongoing auto business, which is still up 2.2 times, which is significant. So just sort of again pointing that out as one of the drivers of it. The EV programs are on track, and again, Rajesh will talk about that in more detail. So overall, auto business has been really firing on all cylinders. The farm business, while there were a lot of expectations about a tough year and a tough quarter, it has actually turned out fairly well. It's a very resilient performance in light of all of the other challenges. And what we see in the farm business is a profit growth of 21% as well. Moving forward then, Mahindra Finance is very well along its turnaround path. We've been talking about that for the last few quarters. Some of the key highlights here are that the asset growth momentum continues at a fairly significant pace. Asset quality is the single most important factor that we are driving in this business. And asset quality has resulted in gross stage 3 being at 4.35%. This is a number that was at 16 and plus percent 2 years ago. And net stage 3 is at 1.8%. So a number of actions have been taken. We've talked in the past about what we were going to do, and much of that has been done, which is being reflected in these numbers. As a result, what you see is assets under management have gone up by 28%, and as I mentioned earlier, profits up by 58%. Tech Mahindra has had a tough quarter, and there were a number of reasons for that. Margins are down, profits are down. There is a clear path to drive a turnaround in this space. And with Mohit Joshi coming in as CEO, he's joined now. He's spent a month or so in the role, a couple of months in the role now. And as he outlines his plan going forward into the future, I would look at this as similar to the Mahindra Finance turnaround that we had started about a year and a half ago. And that's something that we will initiate in TechM now. Our listed growth gems, logistics, hospitality, and real estate, are all positioned very well in their industries. Logistics has seen some challenges from the implementation of the integration of Rivigo, and those are behind us now. So you'll see improvements in that going forward. Hospitality is on a very good track, a huge amount of demand. The business is positioned very well as a leading player in family vacations in India. And the real estate business is on a very strong track also in terms of much more aggressive growth. All three have outlined plans for a 5x growth in the next 5 to 7 years. And the final point that I'll make before I hand it over to Rajesh is we continue to deliver on our commitments. We've talked about 18% ROE. We are at 24% right now. And no, that does not mean we're taking the bar up on ROE. 18% is a very strong bar to have. We will continue to maintain that bar. And as we invest in further growth, we might see that 24% come down to 18% at some point, but we feel that that's a very strong bar to have. That's what will enable our 5x growth challenge for our growth gems and really driving that. EPS growth has been 60% as compared to the 15 to 20% commitment that we've delivered. So overall, a very strong quarter, lots of credit to all our teams that have helped drive these results. And to talk more about that, I'm going to invite Rajesh. After just highlighting the key messages here, consolidated PAT, as you saw earlier, is up 60%. Auto and farm are capitalizing on market leadership. Mahindra Finance moving very well forward. Tech Mahindra, we've got to initiate that turnaround. Capital allocation continues to be very strong for us. In this quarter, it's actually yielded us investment gains as well. In addition to KG Mobility, we had MCIE, and we had Sanyo that resulted in 870 crore profit, and consistent delivery on commitments. So with that, Rajesh.
Hi, good afternoon, all of you. I will try and do this quickly so we've got enough time for Q&A. So I'm going to cover the automotive business first. As you can see, we've had a very healthy volume growth, 21% for the quarter. Our SUV volumes crossed a lakh. Revenue market share, we were again number one with a gain of about 3 share points. And on the LCV less than 3.5 tons, we hit 49% market share, which is about a 5% gain, and our highest quarterly market share in the last 5 years. This shows you the trend line of how our volumes have ramped up from 42,000 odd in the quarter one of FY22 to, that's the SUV volume, and crossing 100,000 in the quarter. And likewise, you can see our revenue market share at number one over the last 6 quarters. This is an update as on 1st August on our open bookings. As you see, we maintained our open bookings at 281,000, and that's in spite of the ramp up that we are seeing in our volumes and sales. That's because some of the newer strong models continue to remain very strong on bookings. Thar is continuing to get 10,000 bookings per month. The Scorpio N, including and Classic together, get 14,000 per month, and you can see that even for 700 is 8,000 per month. So the strong brands continue to be very strong, and overall new bookings are at a rate of 48,000 per month. This is an update on the capacity planning slide that we had shared earlier. We had said that by quarter 4 of last year we would be at 39,000. That's materialized. We saw in July that we sold over 36,000 in the domestic market and about 1,000 in exports. So we were very close to the 39,000 by way of sale, and as Anish said, we met the full capacity utilization by way of production. We had said we would go to 49,000 by the end of quarter 4 of this financial year, and that's on track. We had celebrated selling over 9 lakh of the Scorpio brand. Also, we got a very good army order, and that's something we believe is a very strong part of the brand DNA, and we got the second order in July of 1850 Scorpios. This is the trend line of the LCV less than 3.5 ton volume and market share, and as you can see, we've gained about 5 share points. I would request playing of the Bolero Max AV, which is, we've redone the whole Bolero portfolio, and that's one of the key drivers of our increase in the market share. Can we have the AV?
नई बोलेरो मैक्स पिकअप रेंज, इसमें सब कुछ नया है। टायर्स इतने बड़े कि यहां से भी हाईवे समझ के निकल जाए। इसका टर्निंग रेडियस अब इतना छोटा है कि तंग गलियों से भी सीना चौड़ा करके निकलता है। अलग अलग पेलोड, अलग अलग कार्गो साइज, इतने सारे ऑप्शंस। इसमें सब कुछ नया है, बस एक चीज पुरानी है। आज भी वही भरोसा जिसने इसे बनाया है इंडिया का नंबर 1 पिकअप। नई बोलेरो मैक्स पिकअप रेंज, मैक्स बने सबसे ज्यादा।
So this is actually a fully refreshed product portfolio, all new products in all the horsepower categories. We've started taking our new portfolio products international. We've launched the 700 in Australia, and you can see the kind of showrooms we are creating, globally. Strong statement about how we are building our brand globally. You see these visuals across Australia, New Zealand, and South Africa, where we've launched the portfolio products, all with a view to building a strong brand in these markets. We also set a world record for this was in the Simpson Desert in South Africa with the Scorpio N. It's a Guinness Book World Record for covering time and distance together, so 385 kilometers in 13 hours non-stop, a testimony to the reliability and the capability of the product. In the last mile mobility business, we continue to do very well. It was our highest ever 3-wheeler volumes of 14,700 in the quarter. quarter, and we continue with our market leadership here. This is a quick look at the auto consolidated results. So you can see the revenue grew 27%. The PBIT without the one-time gain of 405 kg mobility, just as a recap, is the Swell Sangyong Motor Company, where we've had a mark-to-market gain of 405 crores. So 81% growth without that, and 141% growth if you were to take the mark-to-market on kg mobility. This is, the question gets asked often, when do we get back to the earlier margins? You can see auto standalone is at 7.5% PBIT percentage margin, clearly best among peers, and also getting us back to our F19 margin level, which we had said we will directionally move towards, and we are happy with the pace at which we've been able to accomplish this. A quick look at FES. Volumes were down, but we gained market share. We were expecting Q1 volumes to be slow because of a season shift on Navratra between April and March last year. We've gained a 0.2% share in the quarter and 0.5% share YTD in July. This is a trend line. This is our highest quarterly market share since Q2 of F20. Two key parts to continuing our market strategy, gain of market share. One is, of course, strengthening our channel. The second is launch of the OJA, which is going to happen on 15th August, and the launch of the Swaraj Target tractor, which has been launched. The Orchard and the lightweight tractor market size is approximately 50,000. The reason I say 50,000 is it's an application-based segmentation, so you never get exact precise numbers. And in that segment, our market share is 30%, which is well below our overall average of 42.9, which indicates that we have a very good upside to gain market share with two new launches in this segment. We are scaling up farm machinery for growth. We saw 24% growth in Q1. Rotavator market shares are up. We've gained market share, and we're strengthening our product portfolio. Other products like rice transplanters and laser levelers, etc., are doing well too. Farm consolidated financials, 9% revenue growth, 22% PBIT growth. And comparing margins, since last time started sharing farm standalone and core tractor margins. You can see our core tractor margins are now getting very close to the F19 level at 18.6%, and a very good improvement even quarter on quarter, and certainly over last year as well. With that, I'll hand over to Manoj. Thank you.
Everybody. I think I'm going to cover some slides quickly on summarizing all the numbers. I think you heard about auto and farm separately. I think the overall numbers at a consolidated level, it's 19% growth in terms of revenue, and it was led by auto, as Rajesh explained. Farm had a steady quarter. Mahindra Finance, I want to call out, it was a 23% growth in Mahindra Finance. So that's another company which has contributed very well to the overall growth. From a PAT perspective, about 60% growth in PAT 23508. I think we called out the impact of KG Mobility relisting. As you know, we had taken a write down as SYMC went through bankruptcy. It has now emerged out of bankruptcy and listed again. So there's a 405 crore gain, which has been reflected in the numbers as we marked it to market based on the market price as of 30th June. So that's in those numbers. Just a quick look at how that number splits up. I think if you look at Q1 last year, it was 2196 crores. And this is going to be uploaded, so it will be in the public domain, so you don't need to click a photograph specifically, but feel free. I think from an auto perspective, 533 crores is operational, 405 crores is because of KG Mobility. That's the increase. Farm is very steady, 205 crore increase. And overall, as we call services, which is Tech Mahindra, Mahindra Finance, and all of our businesses which are catering to the growth gems and the other businesses, they're all clubbed together as services. That's contributing positive 169 crores. Just a quick look at standalone, and now standalone here reflects the core auto farm business, and that's a growth of 23% and overall growth of 98% in terms of PAT. With this, I'll leave it here, and we can obviously interact and have more details about the financials as we go forward. With that, I invite Anish to come back on stage.
Thanks, Rajesh and Manoj. Topic that I know everyone's very eagerly looking forward to. We'll come back to questions in a few minutes. Let me just spend a few thoughts on this, and then we'll open it up for questions. So first, as I said earlier, I do want to emphasize that our capital allocation discipline has not changed. Let's talk about RBL, which is where all the questions came in. This is an investment of 417 crores today. It's an investment in a sector that is a core sector for us, financial services. A sector that we want to grow a lot more in. We have a business in that sector that's 40,000 crores or almost 40,000 crores of market cap. I'm rounding up a little bit there. And this investment is really for us to understand banking in a lot more detail with a very long-term view. This is a 7 to 10-year view. There are no assumptions on our part today whether we want to get into a bank or not. In fact, at this point in time, we cannot and we do not want to. There is no intention of going further beyond this at this point. But it helps us understand this sector a lot better to enhance the value of a business that is nearly a 40,000 crore market cap business in this sector for us. Why RBL Bank? We saw an opportunity with a bank that was very well run, a very strong management team, a very good foundation, at a price to book that was lower than 1. It was a great investment opportunity from that standpoint that came together with our desire to understand this sector in banking a lot more. And that is the reason we've gone ahead and taken a 3.53% stake in this bank. At this stage, we do not expect to go higher. At some point in future, if there's a very compelling strategic reason, which we will have to understand in detail, evaluate in detail, in line with our capital allocation guidelines, we will look at it at that point in time. But today, that is where we are. Right? I think I've covered all the key points that we had here. Let me go further. Not just will it not change, we've in fact enhanced our discipline. And you will see that in our reporting numbers as well. There is no others category in what we report anymore. In the past, you would have seen others, and others sometimes tends to be a parking lot for things that we don't like. But there is no other category anymore. There's accountability. So every business has an owner, and that owner is accountable for that business. Not that that wasn't the case in the past, but it's just further enhanced at this point in time. Therefore, our segments will be auto, farm, and within services, financial services being greater than 10% for us is reported separately. And then we have the other services businesses, the industrial businesses, and consumer services. What you will also see going forward is further transparency within these segments. So in tractors, we've already started breaking out margins for core tractors and the overall farm segment. In auto, you'll start seeing a lot more transparency on the various different segments in auto. So that way, each segment is held accountable and each segment should be driving performance. What we've also done with exceptional items is consistent with accounting guidelines in the past. Impairments of investments were taken in exceptional items. But we've gone a step further. We've said some of these impairments were based on management actions. So they should not be exceptional. We should take accountability for them. And we should be putting them in our core numbers. And similarly, where we create value, should be in our core numbers as well. So you will see a lot less of exceptional items in our numbers going forward, which is again to drive both transparency and accountability, further strengthening our capital allocation discipline. And this is something you're seeing for the first time now, because we want to start showing our results in auto, farm, and services. And this is a picture of a 3-year cash flow. We've talked about F22 to F24. We had shown it collectively in the past. We've now shown it separately for auto, farm, and services. And let me highlight a few things here. First is net cash generated. In F22, 23, and first quarter of F24, actual numbers, our auto business has generated 4,072 crores of cash after all its capex needs. Our farm business has generated 4,574 crores of cash, again after capex needs, investments, everything else. And services has generated 5,196 crores of cash. Our RBL investment will be in services. Because it happened in second quarter, it doesn't show up here as yet. But where you will see it is in the ongoing line. You see 415 crores. We will add 417 crores there for RBL as we look at this next quarter. That is what we look at in terms of first the magnitude of it. It's a small investment for us for understanding an industry a lot better, where we got a 40,000 crore investment. That's how we think about it. Which is frankly why we were surprised there were lots of questions on it in the last week, but I'm glad there were questions so we could address them. The second thing I'll mention here is we've talked in the past about a principle that auto and farm cash will not be used for services. You see that clearly outlined here. Not only that's the case, but services is generating a lot of cash by itself after all the investment that it needs to make. And the third thing I'll emphasize here is
Hindustan Copper.